In the world of finance, what you don't see is often what hurts you most. While most people focus on growing wealth through investing, many quietly lose money through hidden traps. In insurance policies, bank loans, and financial products designed to profit the institutions, not you. These traps aren't obvious. They're disguised with comforting words like security, protection, and benefits, but beneath the surface lies a complex web of fees, fine print, and financial dependency. The truth is, if you don't understand how insurance and loans truly work, they can quietly drain your wealth for decades. And the worst part? Most people never even realize it's happening until it's too late. These traps are built on trust, your trust, and they feed on your desire for safety and simplicity. They promise peace of mind but often deliver slow financial suffocation. Today, we'll expose these hidden traps, show you how to avoid them, and help you build a financial foundation that works for you, not the banks. Because financial freedom isn't just about making money, it's about keeping it and knowing where it's silently leaking away. 1. What are the hidden costs of security? Most people buy insurance with peace of mind in mind, yes, and that's valid. But what they often overlook are the real costs buried deep inside policies. Life insurance, for instance, is often sold as an investment product. But many whole life or universal policies come with high commissions, low returns, and restrictive conditions. You might pay for decades before you even break even. The hard truth: you don't always need an investment-linked insurance plan. Sometimes a simple term policy and separate investments yield far better results. Insurance should protect, not profit off you. But the system thrives on confusion. The more complex the product, the easier it is to hide fees. Agents often highlight benefits while downplaying costs, and most buyers never read the 50-page terms. They buy for emotional comfort, not mathematical logic. A truly smart investor understands that insurance is not an asset. It's a shield. If it costs too much to maintain, it's not protection, it's a leak. Ask questions. Compare options. Because peace of mind built on ignorance isn't safety, it's a setup. Smart investors insure their risks, not their lifestyle. 2. The debt spiral. Nobody talks about loans can be powerful, but they can also quietly enslave you. From personal loans to credit cards to mortgage leverage, debt can either accelerate your growth or suffocate it. The trap lies in interest. It compounds against you just as effectively as investments compound for you. Many borrowers underestimate the lifetime cost of even small loans. A 10-year loan at a modest interest rate can cost you almost double the original amount by the time it's fully paid. Banks market debt as financial flexibility, but flexibility turns to bondage when payments consume your freedom. And here's what most never see us: debt shapes behavior. It limits choices, adds pressure, and forces you to work not for growth, but for survival. Every swipe of a credit card feels small until the statement arrives with a reminder of your past impulses. The modern system isn't built to keep you debt-free. It's designed to make debt feel normal. But financial independence begins the day you stop seeing credit as convenience and start treating it as a contract with your future. Use debt only when it builds assets that outlive the loan itself, because every payment you make isn't just money, it's time. And time is the one currency you can never earn back. 3. The illusion of free money and hidden fine print. Have you ever noticed how banks and insurance companies lure you with bonuses, cashback offers, or limited time incentive? It's psychology designed to create urgency and trust. But behind every reward lies a carefully calculated mechanism to ensure they earn far more than they give. That 0% interest for 12 months credit card? The real profit comes from those who miss one payment and get hit with 25% interest. That guaranteed return policy? It's usually after fees, surrender charges, and restrictions that limit your access for years. Read the fine print. If a product sounds too convenient, it usually comes with invisible strings. These traps thrive on emotional decisions. They make you feel like you're getting something for nothing. But in finance, nothing is ever free. Even loyalty programs are engineered to keep you spending more. The only way to win the game is to know the rules better than the player on the other side. Always ask, where's their profit coming from? Because if you can't answer that, you're the profit. Awareness turns confusion into control, and control turns small choices into big savings. The moment you understand how institutions make money from you, you reclaim your power. 4. Smart insurance strategies. Every investor should know. Insurance, when used wisely, can protect what truly matters: your family, income, and future. The key is to buy coverage, not complexity. For life insurance, prioritize term plans: simple, affordable, and effective. For health, look for comprehensive coverage with clear claim ratios and minimal exclusions. Avoid products that mix protection with investment. They serve neither purpose efficiently. Instead, invest your surplus into assets you control, like index funds, ETFs, or even real estate. If you already hold complex policies, review them annually and calculate the real yield after fees. Canceling or restructuring bad policies isn't failure, it's correction. Financially intelligent people constantly audit their protections, not just their profits. Understand that proper insurance doesn't make you rich, it keeps you from becoming poor. Your safety net should be flexible, affordable, and transparent. When you separate insurance from investment, you stop paying for confusion and start paying for clarity. Because true protection isn't about buying peace, it's about building confidence. 5. The psychology behind financial traps. Why do intelligent people fall for bad insurance and costly loans? Because they crave certainty, and financial institutions sell that emotion expertly. They promise peace of mind in exchange for trust, but that trust often becomes dependency. In reality, the best financial security comes not from products, but from knowledge. When you understand money, you stop fearing uncertainty and start managing it. The most dangerous financial trap isn't a policy or a loan, it's complacency. People don't get trapped because they're foolish. They get trapped because they don't question. Comfort becomes the enemy of growth. The same trust that builds relationships becomes the weapon that drains wealth. And in the quiet moments between paychecks and premiums, most realize too late that financial ignorance costs more than any loan ever could. The truth? No advisor, bank, or institution will ever care about your money more than you do. Take ownership, stay curious, and remember, awareness is the armor that protects your wealth. Financial freedom isn't just about chasing high returns, it's about avoiding silent losses. Insurance, loans, and credit are tools, but only if you use them with awareness and discipline. Protect what matters, borrow with intention, and read every line before you sign. Because the wealth you preserve today builds the independence you enjoy tomorrow. If this video gave you clarity, hit like, share it with someone who's unknowingly trapped, and subscribe for more financial wisdom. Remember, banks and insurers make money from your inattention, but the moment you wake up, the game changes. Knowledge is your best insurance, and financial awareness is your greatest return.